The buys are a little bit more stringent. I require 2 bars of Landry light. It's a whipsaw filter, and you have to also be within 10% of the all-time closing high in the light pink zone. So technically, if you were just buying when you're within 10% of the closing high, you would buy on this day here, on this week here, I should say. But I like to have the Landry light filter in there so you avoid some of the whipsaw. Now, the downside, the idea is to get out quickly to avoid the so-called diaper change moments. But you can see you had 2 bars of Landry lights, and you are within 10% of the 50-week closing high. In this case, you're up in the green zone. So if we back this out for a second, that's within 5% of the 50-week closing high, okay? It's really simple stuff. So you have 2 bars of upside Landry light you would buy on this close, and this is on a weekly calendar basis. It's calendar chart, weekly chart, calendar basis. So your sell signals and buy signals would be on Fridays. And that was not designed intentionally like that, but I decided to just go with it once I realized that I was using a calendar chart and not a weekly chart, or a pure a calendar chart would be Friday to Friday, as opposed to a rolling chart, which would be Monday to Monday, Tuesday, and so on and so forth. Anyway, so you can see there's the 5% zone, the greater than 5% zone, and of course the 10% zone, 10% or more zone. And last Friday, we did get a sell signal because on the Qs, at least, we closed below that 50-week simple moving average. So again, the buy was back here. Again, 2 bars of Landry light. If you back up the presentation, you'll see a zoomed in. That's just a zoomed in piece of that chart that I just showed. And then there was your sell right there. So that was a pretty good run. Now, of course, with trend following, a couple things. Eventually, it's going to end badly, right? It's like buying a pet. Eventually, it's going to end badly, as George Carlin once said. And that's one thing you have to live with. And with longer-term trend following like this, pure longer-term trend following, your accuracy is going to be pretty low, although this trade worked out, obviously. Your drawdowns are going to be abysmal. So there was a 6.4K haircut, thereabouts. I seem to remember an 8K haircut in here somewhere. And then this thing was nicely profitable back here. And had it stopped out, it would have stopped at a loss. So that would have been painful too. Anyway, so like I said before, just for S&Gs, I bought 100 shares on the signal, 319.49. And this is the actual trade. And I didn't realize there were dividends on the Qs. I guess I should have known that. I wasn't really paying attention. But it added up. Let's see, 100, 200, 300, $400 or so of dividends over the period. That doesn't poke in the eye. So you add all that up, take out the original $32,000 investment, and it was 16K overall divided by 31,000. So it's a 52% run. That's better than the poke in the eye. Now, again, the designer's intent, as I've said before, is to avoid the so-called diaper change moments, and that's an Ian McActivey term. Ian's my brother from another mother. He's looking down on us, laughing, I'm sure, especially now. He's probably so pissed off because gold's making these all-time highs or whatever it is. Is it all-time highs? I know we were talking about 3,000 last week, and I think we blew through that. I'll take a look at GLD in a minute, which I haven't looked at futures in a while. But anyway, 52%, that was a pretty damn good run. A couple of random thoughts. Trend following is amazing when it works, and I'm going to circle back to that in just one second. As I've said before, back when I lived in the country, my wife was always, she was very impressed with my handy skills, and I'm pretty handy. I have every tool probably known to man, and if not, I'm going to acquire it. But she was always like, all you got to do is, click your wrench on that pipe, and it'll stop leaking. And of course, 3 hours later and 4 trips to the plumbing store, she walked in the plumbing store once. She threw the door open and goes, "I want 3 of everything that you have in here." She was getting sick of me sending it back and forth. But anyway, she's always like, "Oh, you got to do it." It's like it always looks a little easier on the surface, and that's trading in general. Now the drawdowns are tough. I didn't. Again, my designer's intent with this was just to get out of the way when the market tanks, and I didn't factor in money management. Now, probably should have said, okay, well, if you're up 20% or whatever the number is, maybe take off some shares or whatever. But I thought it would be kind of fun, and I know you want to part of me, just to follow it completely mechanical on a mechanical basis. Now, I don't know if I'm gonna keep following this one mechanically, but I think it would be kind of a good little experiment. But it's gonna be there's gonna be a lot of drawdowns, I would imagine. You know, when you hit it out the park like that, that's probably the exception, not the norm. I guess I'm not selling you on my system, am I? Well, it's free, so you know. Trend trades, as I said a second ago, especially longer term trend trades, eventually end badly, and that's why we take a partial profit. It's kind of like that SKBL or whatever that stock was earlier. Had I just bought it and got knocked out on that halt, I would have lost a lot of money on that trade, as opposed to make it a little bit because I took partial profits. Now I'll tell you this: following a mechanical system, years ago, I used to program mechanical systems. As I've said 1,000 times, I'd wake up early and program for hours, and then sometimes stay at work late and program for hours. And over that period of time, I developed a lot of systems, and eventually it sort of morphed me into a discretionary trader. So it's kind of hard to actually follow this trade. Now, initially it was just, 100 shares, who cares? But then it started to add up a little bit. It's like, holy crap, I just lost $8,000 on that last little spill or whatever. Not the last spill. It was a spill that when I just got in it was an $8,000 drawdown, and then $6,500 drawdown in the end, as I just showed you. So it was a little tougher than I thought. Now, I tell you this, on Friday, because the market had rallied a little bit, even though it was still a sell, I'm like, you know what, Dave, why don't you sit tight and let's just see what next week brings and see if it's still a sell next week, okay? And I was like, no, I said I would follow mechanically. I showed this thing mechanically, so I followed mechanically. And here's the other thing too, and it's probably important that this actually happened in the back testing. Luckily, and I don't know if it'll keep working this way in the future, but this system would have kept you out of every major bear market in history. And in 1987, on the Friday before the crash, it had a sell signal. So the chances of the market crashing, like last Friday, I'm thinking like Monday, it's probably not going to crash on Monday, but because I have a signal, I have to follow it just in case it does. I'd have felt like an idiot if I wouldn't have gotten out and the market crashed on Monday. So it's a little tougher than it looks to actually follow a mechanical system like that.